All right,
Can you hear
welcome,
me?
Daniel. Tell us a little bit about how you found out about lifestyles and what you've been doing and what do you do for a living. You're actually one of our vendors.
I am. So I actually learned about lifestyles through Leah Slaughter, who's one of the owners of OmniKey Realty. She
We
happens to
just
be my
talked about that.
cousin. She happens to be my cousin, and she told me one day, you've got to check out this group. They're full of movers and shakers, just the cream of the crop in the residential world. So I reached out to Charles Ho, and actually it turned out also Charles, who was a previous multifamily vendor, it turned out Charles
Mentor.
had worked with another cousin of mine on the other side of the family. So it was 2 points telling me I've got to get involved, and then I ended up financing a deal for Charles, and that got me motivated to really get more involved, I guess. And so yeah, I after the 2-day seminar, actually I've got a couple of my classmates that are tuned in today. I've been texting with.
Hey,
They've been super excited to hear this. And yeah, I mean, Dave is an amazing presenter. I mean, I've been investing for over 15 years, and the stuff that I was hearing out of that seminar was still, you know, it it was hammering home the basics, the stuff that really works. And it reminded me that, the stuff that I'd been doing over the years is exactly the right plan, but I just have been putting it on slow,
right.
just slowly building. And lifestyles really just reinforced all the things I've learned over the years. Say, you know what, I have actually learned a couple things. So I right now I'm a senior vice president of commercial lending at Guaranty Bank and Trust, and I think we just got 2020 Vendor of the Year for the North
Okay.
Texas Multifamily Vendor of the Year. So super excited about that. And I mean, this is the best situation I could ever be in right now. Is being a vendor for lifestyles, and being a member and being able to invest. It's great. I'm very, very fortunate.
So I can see you're already invested in 7 passive deals, but tonight we're going to talk about your single family properties here. So let's go
So
ahead, Dave, to the next slide. So Dave, okay, let's talk about, I think you touched on this a little bit already. You became obviously a lifestyle vendor. Obviously you go to the case study, you start talking to the mentors, and then you're ready to go, right? Rock and
right.
roll. And of course, don't forget, Dell on the radio as well there. Dave, let's go to the next slide. All right, so actually, before we get to the properties you acquired through lifestyles, you actually had an existing fourplex here in Denver, Colorado?
Actually, it was in Colorado Springs, but
Oh, okay.
they all blend together. It's fine.
Sure.
But yeah, so at the time I was working for Northmark Capital, and I had come across this property through my property manager at the time, and the numbers looked really good. And really, I was a little bit worried when I bought it because it was a little bit. I mean, it was definitely lower end workforce housing at the time.
Mhm.
But if you go to the top of that little porch there, you've got this amazing view of the mountains, and it sits right at the end of a cul-de-sac that's basically right at the end of a cliff, and you oversee the entire city of Colorado Springs. So it was I was like, okay. I mean, it was rough around the edges, but I was willing to do some upgrades to it and get it leased up. So yeah, I purchased it for $360,000, and I yeah, I didn't put a whole lot of cash into it. I think we did some minor upgrades, regular turns over time,
Mhm.
increased rents, and then I was talking to my property manager, and I just asked him, what do you think I could get for this property? And he told me, well, I think I could probably get you between 320 and 350,000. I said, really? Then definitely I'm interested. And literally the next day, he had 2 offers for me, and they were above asking. So we ended up going at 560,000, and
Amazing.
and it was, yeah, I mean, it was yeah, it was a good deal.
So with the 1031 exchange, which Dave will go into more detail probably this weekend on it, it's a way to avoid paying taxes on your proceeds here of 277, right? So you sell prior to selling the property, you set yourself up with one of our vendors or an exchange vendor, and instead of course the check of 277 going to you, you're basically telling the government that, hey, I'm going to find additional real estate to purchase with this to avoid paying taxes, and that's basically what you did here, right?
Yeah, I deferred the taxes, and that kind of basically increases my buying power for the next properties.
Right. So let's go, Dave, to the next slide. And so you ended up, so now you have basically 6 months to close on properties that basically equal 277,000 to avoid paying taxes. And one of our agents up here in North Texas, Anna, again, she actually found you 2 fourplexes, I guess. So you turned 1 fourplex into 2.
That's right. Yeah, exactly.
From 4 to 8 doors.
Well, what was really interesting was I had been kind of talking to Anna, and I was under the gun because you got about 45 days to identify something.
Right.
And Anna, I told Anna, like, okay, I really need to get something here. And she was unbelievable. I mean, I've worked with a lot of agents in the past, but she went above and beyond. I mean, she pre-qualified these properties before she sent me, which is so rare in this market. And she knew what she was talking about. And the minute I saw this, I was like, yes, this is what I'm talking about. This is the one. So, you know, it was, and it was right in the nick of time. I mean, it was perfect timing. So, yeah.
So again, and basically it looks like, you know, was it already leased up?
100% leased. It was, I mean, it's a total yield play with some upside in the future. I mean, Terrell kind of is in a growth area, not growing quite as fast as some other parts of DFW. So I think in these types of areas, it's important to have good yield going in. And you know, it turns out that one family occupies over 50% of it. They've been there for like 8 years. One lady's been there even longer. So I drove around the area. It's its own little area. It's not surrounded by a lot of other single family development. I mean, it just felt right. And I'd always wanted to have kind of move up on the number of units over time. So sure. Everything was right on this. Numbers were good.
And the point is, what I taught was what? You can't get rich slow. Giving up what you have, what you can become. And it's hard because you were cash flowing great, but there's only so much upside. So moving into now, you got twice as many doors.
That actually reminds me, Dave, when you brought up in the seminar, you had brought up, let's do a calculation based on what is your actual return?
Yep. Passive income divided by equity equals ROI. Yep.
Yeah. So I mean, I was looking at this property in Colorado Springs, and that's kind of what brought up the conversation was, well, what can I get? Because if you divide the income divided by what it's worth, that return on investment dropped in a big way.
So yeah, it's called opportunity cost. Yep.
Yeah, the huge opportunity cost. So I was able to basically re-leverage this and move it. I mean, what it ended up, I could have leveraged it more, but in this case, I had so much proceeds from the other sale that I'm at like a 60% loan to value on this. Now, I would have loved to have gotten a bigger property, but I also didn't.
Being the great banker that you are, you could actually do a cash out refi again in a year or two, pull out more money tax-free, then your leverage goes up, then even though your cash flow goes down, it becomes tax-free again. So, yes.
Yeah. That's why you're the boss.
So again, when you went to closing here, you actually took half of your proceeds you made from the sale, 134,000, applied to your cash out of pocket. So you really only had to write a check for 18,000, basically, right?
Yeah, and actually that was even a mistake on the part of the 1031 company. Had they done the calculation correctly, I would have come out with less. So I'm paying taxes on the small amount, but it's well worth it.
Don't worry about boot, guys. That's something I can explain later.
Sorry, I'm trying to.
So again, you got a great property here, cash flow on $1,244, and again, you're making 10%, which is a terrific return on that as well. But wait, there's more, right? Dave, you got the next slide. So this is your second fourplex you bought.
Yes.
Oh, you went too far, Dave. Go back. There you go.
Yeah. So this one happened. Yeah. Yeah, it happens to be right next to each other. So it made it even better for that purpose. But as you can see, the numbers are slightly different by when you split it out into two buildings. Either way, it's good.
Sure.
And minimal rehab on this one. The only major thing that I had to do was change the circuit breakers on it, or they had the old Pacific Federal Pacific breakers.
You go probably Monarch fault, yeah.
Yeah, so that was the only major repair that had to be done, and the rest of them I'll slowly improve over time, taking the cash flow and building up a reserve. And even the numbers I used in this, I was just making sure I had enough to do the proper improvements over time and do the lifestyles model. Make sure I'm providing a really good quality, a good product, best product, best price, and but it doesn't make sense to kick somebody out to do it.
No, for sure. Yeah, you can do that during turns.
Right.
All right, Dave, let's go to let's see overall how Daniel's doing here. So again, with the two properties, you're making over $2,000 monthly per cash flow. Again, you made yourself a nice little raise there, right? $26,000. Well done.
And I often compare this to what I make on a salary position, and pretty soon. I know it is insane. It's insane that, and this one's, by the way, it's managed. So it's also managed by Omni-Q Realty. Yes. So, it kind of works out because I can have a full-time job and still invest in real estate.
And plus, this is just one of your deals. You have more, all these things cash flowing, just like Monopoly. You turn into greenhouses into what eventually?
A hotel.
A
multifamily for sure.
This is what he's turned his single family into with his properties in, let's see what we got. 4 Texas cities, and you still have one in Colorado?
I do, yeah. It's it's only 700 square feet. It's easy turn if I ever have a vacancy, but I never do. But I slowly, when I moved to Texas, I started selling off all of my Texas properties and moving them into all of my Colorado properties and moving them into Texas.
So you went from the 420 state to this state, right?
That's correct. That is correct.
But 9 properties. Nine properties putting $6K in your pocket, and that's not even talking about your multifamily deals and what they're doing for you as well.
Yeah.
Yeah, and that's why I want people out there listening. Think about this. He's making 72 grand a year tax free. That'd be like $100-some thousand a year job. I mean, that's got to feel a weight off your back, doesn't it, Daniel?
It's a huge weight. Yeah, and I have to tell you, yes. I was going to say something about my boss, but I think I think he's jealous.
I know.
You got to bring him to Dave's boss, right? Yeah. You got to pay it forward, Daniel, like Leah did for you.
There you go.
Absolutely. Yeah.
So it's obviously changed your life. It looks like you've been enjoying life there with your family.
Yes, absolutely. Yeah, I was fortunate enough to have my brother and his wife move temporarily back to Dallas. I've been spending, over COVID, they're in San Francisco. And by the way, talking about San Francisco, you know, they're going to have to leave being in a 4-bedroom, 3-bath house for $4,000 a month, and they're about to pay $6,000 a month in San Francisco. So it's the quality of life here and the cost of living is really superior, which only provides more upside for us. I mean, for everybody that thinks that we're overpriced at this point, just look at the affordability index. I mean, we have a ways to go. All the jobs are coming here in Texas, you know, and the cost of living still is, you know, very affordable. So, I mean, that's probably going to change over time, but that just means the value of real estate is going to go up.
And I remember, I teach all across America. I actually teach out there in San Jose, which is by San Francisco. I teach in Walnut Creek. And a lot of our members out there, they actually invest in Texas, never even been to property. So folks, if you're listening, it doesn't matter where you live. You could do this across state lines. If your state is very landlord friendly, then it's okay to buy where you're living. But some places are run by communists, basically, and it's not landlord friendly. So I remember when I taught in San Jose, the cheapest house I could find was $670,000. It obviously didn't work as a rental. So that's what I'm saying, because I know people, you know, 250 people out there watching tonight from all over. Even with these guys, they're investing across state lines. In his case, it can happen, guys. I just want to make sure you know that.
Yeah, and especially here in North Texas, folks, we have over 500 people a day moving here. And of course, we all know the one thing they need is a place to live.
Yep.
That's it.
And guys, remember, it's workforce housing, the middle class. That's our target.
Exactly.
Well, that's another thing. I'm glad you brought that up, Dave, because that was one unique thing I saw about Lifestyles and a lot of other groups is that they'll focus in on the most important sector. And not only are you looking at the sectors that are really very strong in recessions, and I can say this as a banker, you know, you know, they are also the ones that benefit the most, you know, with the upticks.
Yep, scale's right. Yep. Mm-hmm.
So you're ready to move that down south and open up a B&B? Is that the goal?
Yes. Yes. So, you know, it depends on, you know, I guess it depends on whether I'm going to have, you know, kids or not. So that would probably delay it a little bit. But yeah, the ultimate goal is to have enough passive income that I can live abroad in a area where the cost of living is much less. And I have some friends that live in South America, and I lived in Central America for a little bit. So it's been kind of a goal of mine to eventually end up there, and you know, being able to make such a high passive income in that area is just ridiculously different. And yeah, so a little bed and breakfast, I can cook, you know, create my own menu, you know, have people visit me from all over the world. And I mean, that's the dream, I guess.
I think you're well on your way.
And sorry, people, I just happened to have some Dallas people come down to San Antonio. One of our national winners, Sabrina, come say hi to everybody quick. Just so you know. She's wearing a mask because she has AIDS or something. I don't know. Okay.
We've been driving from Dallas for like 6, 7, 8 hours. Hi, everyone.
There you go. You never know what you'll see in my place, right?
There you go.
It is like a family around here, I have to say that.
It is.
That's for sure. All right, Dave, let's hit the next slide here.
We're up to questions.
Okay, you've been talking about your team. We stress this so much to all our members, you know, have your team in place. You don't want to go out and buy a property, then scratch your head saying, who am I going to get on my team? Have it done ahead of time. So you obviously did that with your contact at the bank, of course, and your cousin at the property manager. And of course, always get inspections done, folks. You know, even on the new construction, you always want to get an inspection done, because even builders will take shortcuts.
They're the ones that caught those breakers, and that resulted in a price reduction.
There you go.
Yeah, that probably saved on your insurance too, maybe. Yeah.
Yep.
All right, Nicole, you got some questions for Daniel?
Just a couple, it looks like right now.
Okay.
Most of them are around the 1031 exchange, and just maybe if we could do a general what is allowed on a 1031 exchange, and you know, we've got some questions about what is and isn't, and the time frame involved.
Do you want me to do a general definition of it?
I think that would be good.
It's got to be like in kind for like in kind. So we use real estate to real estate, okay? Here's what happens, guys. Upon the sale of your property, you have 45 days to target other properties. You must then close on one of those properties within 180 days. You typically have 6 months to do this. You need to have a qualified intermediary. So I don't know who Danielle used, but there's a lot of different companies. For example, we have 1031 ERG Group on our vendors list. So basically, you can defer your tax from one property to another. You can go from a single family to a 10 unit to a 20 unit, whatever. They're both real estate to real estate. Here's what you cannot do, because members ask me this all the time. You cannot go from single family into a deal as a passive investor. You could go from single family to an IRO deal. You could go from single family to being a lead. That's allowable. I hope that answered most of your questions. If you want, after we're done with everybody tonight, you have further questions on 1031, I know it sounds like Cubans and Indians going crazy behind me. I apologize. They don't see each other that often, but you know, it's a party at Dave's right now. So.
We have John Pry and Greg Scott are saying hi to Supriya too, by the way.
There you go.
Hello, John.
So, and then this is a good one. Daniel, if you built your real estate portfolio again from scratch, would it look the same as it does now with the ratio of passive investments, multifamily versus single family? What would you do differently?
Well, that's a good question. Sorry, hold on. I think I've got a decent mix, but I mean the multifamily route is really attractive. As far as, I mean, these leads are, we're not going to go too deep into it, but I mean, they work really hard on your behalf. And, you know, that is a very good way. I don't know. I guess it's hard to say. I like my mix, but it's always changing. And so it's changing according to my experience and what I find on the market. So I think, you know, you go with what you find. So, you know, go with the right deals.
Let me give a little bit of advice on people always ask this question. It's very common. I'm sure Rick gets it all the time. And the first question I ask people about when they're thinking going one way or the other is time. What do you do for a living? How much time do you have? Are you working 80 hours a week as an engineer and have no free time? Passive is the best thing, because you truly, Daniel, how much work do you do on any of those apartments you're investing in, passive investor?
None.
But even on the fourplexes, he's still going to get phone calls. It's still passive income, but it's not true passive income, because there's still some involvement. There's still some phone calls. There's absolutely zero when it comes to being a passive. So that's really one of the biggest factors I think people need to know.
Yeah, I agree. I mean, but I think there is something to be said about getting your hands dirty and getting in there and getting out of your comfort zone and learning that things just don't fall apart. I mean, I've had, these are the success stories, but I've had some, you know, that didn't go so well. But I got to tell you, the ones even that didn't go so well, I held on to, and I did really well in the end. So, and all the while it was providing rental income. So, you know, it's very different than, say, being in the markets. You know, you get to, and you get all the depreciation and tax, you know, write-offs, and you could be considered a professional real estate investor and get all the write-offs associated with that. So there's a lot of benefits to real estate in general.
Absolutely. Very good. Okay, we have some questions a little bit about what does it mean to be passive. So maybe a little bit of clarity on what that looks like. So,
well, when we get to which the next section will be on multifamily, we'll really explain more about passive investing then, folks. Being a true passive is where you invest money in a deal, you don't have involvement. That's what really a passive investor is. I know Daniel had some of them on his portfolio. In other words, he invested in apartments. He wasn't in charge of, he didn't run them. He just got a check in the mail. So that's the difference.
I've got a really good success story on that, but I guess I'll save it.
Yeah, a multifamily case study, yeah, for sure.
A really good call last week.
And really quick, I want you to give some advice. I asked the same thing of the guy before you. You know, remember back when you came through my seminar first time. Now you're a little bit more sophisticated. You're already a banker. You understand lending and all that. But I'm sure it even woke you up a little bit. What advice would you give the new people coming for the first time this weekend?
Just realize that it's whatever's in your head as far as what your worst case scenario is. I mean, it's not true. It's in your head. I mean, when I started out investing, I couldn't sleep at night because I was so paranoid that I was going to get sued, that, you know, somebody's going to slip and fall. I mean, God knows what it was, but it took me a long time to get over that. And I think that held me back in a lot of ways. So I didn't have a group like Lifestyles. And that's why I joined it, because, I mean, I'm being completely serious here. Yeah, I was all on my own. I felt like I was all on my own. I didn't have a mentor to turn to. So I ended up getting into some deals early on that I know I could have avoided. I know, just by associating with a better group of people. And it was, you know, I wish that I had Lifestyles earlier. But, you know, I mean, either way, just don't kill every deal because you're going to analyze it to death. You're always going to find something wrong with a deal. It's just, you just got to do it. I mean, it's real estate. It always bounces back as long as you just buy good stuff. It's, you know, workforce housing, stuff people need. I mean, it really is true.
Yeah, and as you mentioned earlier, it's very forgiving. You know, even when it does go down a little bit, in the end, you still make out okay.
Yeah.
And
So
that's
Daniel,
why I say,
thank you very much.
we make money when we buy. We make money 5 ways. Even if one of those sectors sluggish, the other 4 will make it up. No other asset class can do that. You know, you invest in stocks, you have dividends, and you have the capital gains. That's it. It doesn't have 5 ways, and it's a real thing. It's tangible. You know, and we can use the power of leverage. We get depreciation. We get the tax benefits. There is no other asset class compared. Nothing.
Well, that's one thing. Like when I have, and this is my last point. You know, when people talk to me, you know, they're looking to be a customer and get a loan from us or open accounts with us. You know, I go through a conversation about what it is that they're looking for, how to get from point A to point B, and I always say, go back to your mentor, make sure that you understand, you know, that you've talked about, be very open with them about where you want to be, what you have, what's the risk tolerance. And, you know, I think you just got to surround yourself with the right people.
There you go. That's good advice, guys. We want you to do this for yourself. I'm going to show you how to do it by yourself. But you don't do it by yourself. You form a team, make the money for yourself, but use a team. Try not to go it alone. Daniel, before he found Lifestyles, that's why he couldn't sleep at night. That's why he made a few mistakes. Having a mentor, having a team behind you really makes you more successful. Anything else, Nicole? Any more questions? Or
We got one from YouTube, one of our YouTube watchers actually. Would just like for you to mention your first multifamily deal, maybe a couple of the details about the first multifamily passive deal you got into, if you could remember.
I feel like that is not the topic that we're on right now, but I'll ask for y'all's permission. Otherwise.
Yeah. Do you have a deal you want to show off, that one of your passive deals? Is that what you're saying?
I do have a deal like that I'm really excited about. Now it hasn't closed yet, but the call was amazing. So I got into it. It's a deal in Galveston with an amazing lead. I liked him right when I saw him, and he just got an offer for $1 million more. I mean, he bought it for like 2 point something, 2.2, 2.3, and he got a $3.5 million offer, and he's had it less than not very much more than a year, I'd say, maybe a year and a half. And I mean, it's going to end up being a 46% cash on cash return. So I'm very happy about
that. You know what kind of deal you call that? There's a technical term in the industry.
Pee in your pants exciting.
Pee in your pants exciting. Thank you. Yes. Okay.
All right, you graduated, Daniel.
There you go. And I appreciate you coming on today and sharing your story. You know, it's really good. And Rick, thank you as well. You know, and we're going to move on to multifamily now. And I really appreciate it, guys. Thank you so much.